August is historically the worst month of the year for crypto. So a pullback in August is not uncommon. I think if there is a pullback, investors will be well placed to take advantage of it because the broader themes driving crypto, as you mentioned, institutional adoption, that's not slowing down. In the meetings I'm having with institutions, they are moving forward with adding crypto to their portfolio. So I would take any sign of weakness as an opportunity. If we get the historic August pullback, that sets up for a very strong September, October, and November historically in crypto. I would be seizing that opportunity because I think the long-term outlook is very good.
Historically, August ranks as a worst performing month for crypto volatility spikes. Momentum fades and short-term corrections are common, but according to Matt Hougan, that's not a red flag, it's a green light. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue. Why? Because when the market cools off despite strong fundamentals, it often creates the best entry points of the entire year. If we do get a pullback this month, Hougan sees it as a setup, not a setback. Behind the scenes, institutional flows are rising, regulatory clarity is improving, and both Bitcoin and Ethereum are becoming core portfolio assets for more serious investors. Now let's go back to the interview.
So Matt, the key theme this summer has been institutional adoption of crypto, which overtook the macroeconomic narrative as the main performance driver. But now August is off to a rocky start following weak jobs data and the president's new tariffs. So I'm wondering if you think investors should brace for a reversal of that dynamic as traders potentially continue to sell out of risky assets.
Oh, it's a great question. August is historically the worst month of the year for crypto. So a pullback in August is not uncommon. I think if there is a pullback, investors will be well placed to take advantage of it because the broader themes driving crypto, as you mentioned, institutional adoption, that's not slowing down. In the meetings I'm having with institutions, they are moving forward with adding crypto to their portfolio. So I would take any sign of weakness as an opportunity. If we get the historic August pullback, that sets up for a very strong September, October, and November historically in crypto. I would be seizing that opportunity because I think the long-term outlook is very good.
Now, it seems like Ether got a lot of attention last month, jumping nearly 50% in July. And that's as Bitcoin gained 8% over the same period, though it did hit a new record above $123,000. What factors drove Ether's outsized growth last month? Was it ETF inflows or all the new crypto treasury companies focused on accumulating ETH tokens?
It was amazing. There were three factors all working together at once, which is why you had that huge move. So we saw significant inflows into ETFs. ETH ETFs did more inflows in July than they did in the preceding year. So that was an enormous acceleration. We saw, as you said, ETH treasury companies come into the market and buy billions. We know what that did for Bitcoin, right? It drove it from 70,000 to 100,000 to, as you mentioned, 123,000. Companies were a big driver of that. Now it's repeating in Ethereum. And the third thing is in DC, we made major progress on stablecoins. You saw the Stablecoin Genius Act signed into law. Guess what's the number one beneficiary of stablecoin activity and growth? It's Ethereum. That's the number one platform for issuing and moving stablecoins around the world. So that created a great narrative for investors. I think all three themes will continue throughout the year. So I'm very bullish on ETH from here.
So we're going to come back to your point on stablecoins in just a minute. But first, last month, Bitwise released its crypto market review for the second quarter. And the report called the quarter, quote, exceptional and one of quiet progress. And you note the fact that there are multiple factors driving that, including the confirmation of pro-crypto SEC Chair Paul Atkins, Coinbase entering the S&P 500 index, and then stablecoin issuer Circle debuting really what was a blockbuster IPO. So in a nutshell, how would you categorize the quarter based on your research, and what do investors have to look forward to in Q3?
Yeah, it's everything happening all at once. If we had been talking a few years ago, any one of those stories could have been the only thing we talked about. Coinbase entering the S&P 500 as the first crypto company. Now it's owned by almost every American investor. That's enormous. But these other stories are just as big. Just this week, we had the SEC announce Project Crypto. The chairman of the SEC called this a generational opportunity to upgrade America's financial infrastructure. I think that phrase, everything, everywhere, all at once, all the things crypto talked about, hoped about, looked forward to for years, seem to be coming into fruition. It's really an incredible moment.
Now, this Q2 report from Bitwise points out that one especially intriguing area to watch is stablecoins and tokenized assets, noting that assets under management soared in recent months and show no signs of slowing.
Yeah.
Already, big names are jumping into the space like JP Morgan. Even Walmart and Amazon are reportedly exploring issuing their own stablecoins. So, do you think that stablecoin deployments start to take off now across some of the non-traditional, non-crypto native players?
Yeah, absolutely. So the big thing that's going to happen is growth. The US government, which is not like a bullish analyst, says that stablecoins could go from $250 billion to $3 trillion by 2030. That's 4+ years away. That's a 10 or 12xing of the market. That's an enormous growth. I think they may be undercounting, but even if we get that, it's a massive investment opportunity. Do I think we'll see Amazon and Walmart directly issue stablecoins? I'm not sure, but will they get involved by allowing stablecoins to be used for paying for things on their site, maybe offering discounts, maybe getting a share of revenue? I think that's what will happen. I think stablecoins are going to fundamentally change the way we do payments in the US, which is hard for people to imagine. But I would take us back to previous times we were able to do things electronically that we previously couldn't. Things like email, disrupting how we move information around the world. Stable coins are like that for money. It makes the money frictionless, global, and instant. I think it's going to be a major change.
And what does this mean for your two market leaders in this space, Tether and USDC?
Yeah, huge market opening. I mean, again, the government says this will 12x over the next 4 years. You might wonder, how will they compete with JP Morgan, with Bank of America, with other financial giants that come into the market? The history of financial innovation says, yes, those giants get a stake, but the crypto native or the native companies that built that industry do very well. As you know, I come from an ETF background. The largest ETF company today is BlackRock, but they had to acquire that firm because it grew outside of the traditional mutual fund industry. Often these people discount these native players. I think Circle is a generational company. I think Coinbase is a generational company. I think it could one day be a $1 trillion company if it continues to execute year after year. So I wouldn't discount these native players and assume JP Morgan will waltz in and own the market. That's not how innovation works.
Now back to Paul Atkins. Last week, as you mentioned, the SEC debuted this Project Crypto initiative to modernize securities regulations to allow for crypto-based trading. Now that announcement came amid a surge of interest in tokenization. Chair Atkins discussed the importance of preventing crypto firms from moving offshore due to one-size-fits-all rules. What do you think about Project Crypto, and do you think it'll be effective in achieving that goal?
I do think it'll be effective at achieving that goal of onshoring innovation in the space. And I think it's important for America and important for investors. It's worth noting just how poor our existing financial infrastructure is, right? It hobbles along on ancient platforms. It trades 5 days a week from 9:30 to 4. That's not the world we live in anywhere. That's like the 1980s. We're in the 2020s. It should be 24/7, 365. It should be global and frictionless. And what Atkins says is he's going to move us there. This will be the biggest change in market infrastructure since we went from floor trading to digital trading. It's that scale of change, and he's going to accelerate it. So it's great for the US. It's great for crypto companies building in the US. And it's going to completely, I think, remake how we trade stocks, bonds, ETFs, and how we move dollars. Everyone should read the speech. It's a sort of guideline on how to build a portfolio in this space. Every section gives you an investment idea, and it's pretty exciting.
Bitcoin isn't just being adopted in the US, it's going global. Today, over 160 companies worldwide hold Bitcoin on their balance sheets, more than double the number from just last year. From Metaplanet in Japan to Capital B in France, we're witnessing the rise of a global corporate Bitcoin movement. The model is clear. Digital capital plus digital credit equals a new financial paradigm.
We see Bitcoin as digital capital. The business model of the company is to accumulate the digital capital and then issue digital credit like preferred stocks against that digital capital in order to strip the volatility and the risk off of the Bitcoin and provide yield to investors.
And the latest preferred stock offering, it was going to be $500 million, and why not do $2.5 billion? So 5 times as much because of demand.
You know, my first IPO was $48 million in 1998. This year we did 4 IPOs for a total of about the first was $500 million, $500 million, $1 billion, and this is the largest IPO of the year, $2.5 billion.
Like the tie, do you have? Are they all orange now? Mostly.
We only wear orange ties.
You only wear orange ties because I went to DC and didn't think about it and wore an orange tie. Every single person thought I was like advertising Bitcoin, and on I had a picture that I put out, and on Twitter I'm supposedly a holder, and it's dangerous to do that unless you're Michael Saylor. I'll just say that
the future is orange, Joe.
Unless it's Halloween, my wife's birthday. So these numbers were staggering me. It's very arcane, very hard to understand. Are you basically just a leveraged acquirer of Bitcoin, and that's what your company is?
Here's the way to think of it. Bitcoin is a digital commodity. It's about 50 volatility, 50 ARR, and you want to hold it forever, a 50-year duration asset.
Okay.
If you want amplified Bitcoin, MSTR, the equity, is amplified Bitcoin. People want 2x Bitcoin exposure. The options jockeys love this. The derivatives traders love this. If you want structured Bitcoin, that's Strike, STRK. We give you like the 80% of the upside, and we give you 20% in a structured dividend, and then we give you principal protection. That's for people that would prefer to invest in hedge funds or S&P indexes.
But you're using the proceeds to buy more Bitcoin. You just keep adding on to how much Bitcoin you have. And your average price is what, 73,000?
Yeah, we'll sell a credit instrument like Strike, and we'll buy Bitcoin. So we're taking the volatility and the duration and the upside for our equity investors, and we're giving a structured instrument to the credit investors. Now, Stretch, which is our latest IPO, and I think the most exciting product, it's like treasury Bitcoin. It's for someone that wants monthly dividend, they want principal protection, they want the lowest volatility, they want a high yield savings account, and it kind of competes with money markets or with treasuries. And so what the company has done is we're taking this pure digital capital asset that's got a lot of performance but a lot of volatility, and we're refining it into securities that conventional investors can buy depending upon their risk tolerance and their duration interest.
Is there ever too much Bitcoin for you to own? Like if you could own all of it?
I don't think we'll get all of it. I don't think in the range of 3 to 5 or 3 to 7% is too much. BlackRock has got more than
I
us.
just wonder. I was thinking about the mental exercise of if you could actually own all of it, like if you would even, bless you, if you would want it.
Well, we started and we had very little, and Bitcoin was 10,000, and now Bitcoin's more than 100,000, and 97% of the Bitcoin is worth 10 times as much, and somebody else, not us, has it. Right. So as a practical matter, what we're doing is we're monetizing and powering up this.
I totally get it. I just mean, if you owned all of it, would that change the entire behavior of Bitcoin?
Yeah, we wouldn't want to own all of it.
I wouldn't want to.
We want everybody else to have their piece. The nice thing there is there's 160 companies that are capitalizing on Bitcoin in the public market, up from about 60 last year. So the Bitcoin treasury movement's exploding. And companies like MetaPlanet in Japan and Capital B in France and Smarter Web in the UK. And then there's a raft of them in the US, Anthony Pompliano's company, and 21. They're all capitalizing. The big idea is I take digital capital, I issue digital credit, and a digital credit instrument can either be longer duration or it can be higher performance. We're offering 9% dividend yield with Stretch. The average money market's 4.2% dividend yield. No one would ever want to give a 9% perpetual yield in a bond that's backed by real estate or backed by gold or backed by any conventional fiat asset. But we're investing in Bitcoin, and my 20-year forecast for Bitcoin is 30% a year ARR. So it's easy for us.
Offering yield-backed instruments tied to Bitcoin is changing the game. These products are opening the door for fixed income investors, corporations, and even conservative funds groups that were previously hesitant to touch crypto. Now, they're stepping in with confidence. According to Matt Hougan, Bitcoin's long-term outlook is compelling, 30% annualized returns over a 20-year horizon. And when you combine that potential with principal protection, structured income, and surging global demand, the appeal becomes obvious. Thanks for watching. If you found this valuable, the next video is even better. Click it now and let's keep going.